It was a peculiar day on Wall Street where we saw all four equity indices in the United States touch a new 52-week high on an intraday basis, but none of the four actually closed at a 52-week high. We actually got a little bit of a pullback in a couple of the indices after it was announced that the United States is unlikely to reduce the tariffs on China until after the U.S. presidential election later this year. Of course, tomorrow is a big day with the potential signing of the Phase 1 deal, so we'll be on the lookout for that to see if that moves stocks in one direction or another. But for the most part, we remain in bullish trends. In our trade application example tonight, I'm going to take a look at a discretionary stock that had a nice bounce here today that could be due for some further upside potential. With that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 14th, 2020. First off, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ, and we appreciate those of you that click like and retweet for these Market Outlook related posts. Lastly, we have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and jump into our charts. As you can see, I've got chart 4B pulled up here in front of us, and this will give us a general sense of how things are shaking out with all of our four major U.S. equity indices. And as you can see here, most of these charts are trending in the right direction, at least if you're bullish, from the lower left to the upper right. And as you can see with these labels, like I mentioned in the intro, there's these little green labels that appear on this chart for those of you that are premium market scholars to signify when the security on the chart is hitting a new 52-week high. So that's what I was mentioning before. We actually got those green labels to show up on all four of our charts there. The problem is we didn't close at new highs. With the S&P 500, yesterday was the all-time closing high, and we actually sold off a little bit here today. We were down 0.15%. With the Dow Jones, we actually hit a new all-time high back here on the 9th of January. So although we finished higher today, it still wasn't good enough for an all-time closing high. With the NASDAQ Composite, we hit an all-time high from a closing perspective yesterday, and so similar to the S&P 500, it closed lower today, and therefore we couldn't claim that all-time high closing basis. And then the Russell 2000, remember the Russell 2000 is a bit different than the other three in that it's not an all-time high that we're shooting for. This is a yearly high that we'd be shooting for, and that would have occurred back here in these candles where the closing high on the Russell 2000 probably was about 1678. So we were just shy of that here today, but obviously a pretty decent little bounce there off that rising moving average. For those of you that like the small cap universe, perhaps something to get excited about from that perspective. But the story remains largely the same from a posture perspective. Remember, in these videos, David and I are going to be using that market forecast technical indicator that you see below each of the four charts to gauge what our intermediate posture is. And we use the green intermediate line to help develop that. And when the green line is in the upper reversal zone, like it is on all four of our charts right now, that means that we remain with a strongly bullish posture. Now, you might have heard David stating here recently that from a seasonality perspective, this time period going into about February 10th or 11th can come with a little bit more choppiness, so do prepare yourself for the possibility of a brief pullback. But for the most part, these remain very bullish times in the stock market, and we'd want to continue to press our bets to the upside, at least from an intermediate perspective. All right, let's go ahead and now take a peek at our next chart setup. In this case, let's do the three green arrows. This will be chart 4D for those of you that are following along at home. And as it stands right now, 3 out of our 4 charts do have a 3 green arrow signal. The longest held signal is from the NASDAQ, which gave us the 3 green arrow signal back here on the 8th of January. Remember, the 3 green arrow signal is effectively just looking at 3 different technical indicators, the 30-day moving average, the MACD histogram, and the stochastics to try to determine if they are lined up from a bullish perspective right now. And with the NASDAQ housing stocks like not only Microsoft, and Apple, but also Tesla, it's no surprise that the NASDAQ has gone up at the rate that it has. I don't know if you guys have seen Tesla recently, but it's basically just gone straight up. I remember a market outlook video I did in late 2019 where I said, this is looking like a poker tell is how I explained it at that time, where everybody thought Tesla stock should have been down that day, but it was up big, and that has ultimately led to a massive rally higher, probably a short covering rally. It very well may fizzle at some point, but that stock has been one of the true leaders of this market here recently, and of course a very well-known company on the NASDAQ composite. In terms of the other ones that haven't had a 3 green arrow signal for quite as long, you're seeing that the S&P 500 and the Dow Jones Industrial Average both received their 3 green arrow signals yesterday, and they maintained them here today. Russell 2000 has been without a signal since all the way back here in late 2019. That would have been December 30th to be exact. The trend is still in good shape. It just hasn't had enough oomph, enough momentum to the upside to get that 3 green arrow status yet. You can see that the MACD histogram is still below the 0 line, but it is rounding a corner and heading higher. So if you do see some outperformance days out of the small cap universe in the coming sessions, there's a very good chance that the Russell 2000 could join the other 3 indices with a 3 green arrow status as well. So we'll keep our eyes on that. Let's take a look at things from a longer term perspective now by using chart 4C. This is our 1040 crossover method chart, and we're using it on a weekly candle chart. So these are charts that you might look at if you don't have the ability to trade actively. Some folks use this with their 401k mutual funds as an example, where they might not be able to trade those very often. So anyway, it helps gauge where we're at with current trends and whether we are in the midst of a trend, at the end of a trend, the beginning of a trend. And I would say that where things stand right now is we're probably in the middle of a trend. We're not at the point of topping out, at least that's not what we see on our charts in front of us. And in the case of 3 out of the 4, we started this upward trend going back all the way here to February of 2019. So it's almost a year into this move where we had that golden cross that took place. So for those of you that got back into the market at that time when we got that cross, you're probably pretty happy with the returns you've received along the way, despite a little bit of pullback right here in May of 2019 and another little bit of pullback there in July of 2019. For the most part, these have been exceptional gains that we've seen since the crossover occurred. Now, the one exception to that is down here with the Russell 2000. You can see that its crossover looks different than the other 3 because it just crossed over bullishly here in October, not in February of last year, in October of last year. So this one's a little bit more recent, and under the right set of circumstances, somebody might be able to claim that we're kind of in the beginning of this trend right here. We might see a baton passed at some point where the large cap stocks kind of give way to the small cap stocks. So we'll keep our eye on that, but without a doubt, this has been a market that's been led higher by stocks like Microsoft and Apple, and of course, Alphabet joined the $1 trillion group here recently, along with Amazon. So some really big mega cap stocks with truly remarkable outperformance. In fact, on Twitter the other day, I saw a tweet that said that the market cap of Apple and Microsoft combined is greater than the entire German stock exchange, which blew me away. I don't know if that's accurate. I haven't checked that myself, but I have no reason to believe that is false. So if that is the case, that gives you a sense of the sign of the times. This has been a market that has been led higher by large cap tech, and my oh my, the returns have been astounding. Let's go ahead and now take a peek here at some 12 grid analysis, starting with chart 5A. This is our asset classes 12 grid. And remember that the background colors of these charts will tell you whether the market forecast intermediate posture is bullish or bearish, with green being bullish, and pink being bearish. And then there's a couple of different shades of either light pink and dark pink versus light green and dark green that you'll want to be aware of as well. The darker the shade, the more strong that particular posture is. So if it's a dark green, it means it's a strongly bullish posture. Like we see up here with the S&P 500 in the upper left. But if it's a dark pink background color, like we see here with foreign bonds, that is a strongly bearish posture. So as you can see with this first set of 12 grids here, we've got 3 of the charts on the board that have a pink background color. We've got foreign bonds, we've got oil, and we've got the 10-year U.S. Treasury yield. Treasury yield is weakly bearish at this point, not strongly bearish. With the other charts, you've got a mix of assets that are perking up a little bit. You can see that preferred stocks actually closed at a new high here today, unlike some of these other charts that I was mentioning previously, because PFF, which is the proxy we use for preferred stocks, did finish higher, only by a penny, but nonetheless, that's a new multi-month high that we're staring at right there. Whereas we had a little bit of a give back there on emerging market stocks. EFA, which is the developed foreign stocks, did go higher today, but it was still not at a new multi-month high that was achieved on the first session of January. Also worth noting is that we did have an overbought cluster signal there on EFA. You can see that the last time we had an overbought cluster signal was back here on November 1st, and that one would have actually been what I would consider to be a successful signal. In other words, if you were approaching that candle and it suggested that you should kind of lighten up on your bullishness, that basically played itself out. Now, it wasn't a big drop like sometimes you will see with reversion to the mean types of moves, but had you finally geared up on EFA right here and then watched the next month and a half go sideways, you probably would have been pretty disappointed with that outcome. So that was basically a sign that things got a little bit ahead of themselves there and they needed to take a bit of a breather there. So it'll be interesting to see if that same situation develops here with the newest minted overbought cluster signal that we just received as of today. All right, let's go ahead and take a peek at our next set of 12 grids. This will be the U.S. sectors 12 grid. Healthcare was the leading sector here today. You can see healthcare was up 0.61%, and it was joined in terms of upside action here today by the utilities, which was up 0.29%, and then the staples and industrials just barely got their head above zero, basically a flat day in both of those cases. So really, it was a healthcare story here today. On the downside, you did have real estate investment trusts, or the REIT sector in general, real estate sector through the proxy of XLRE, down 0.49%. So that was the worst performing sector here today. Technology was the second worst performer here today. And I mentioned before, technology has been on one of the most remarkable runs we've seen in quite some time, especially mega cap technology. So it'll be interesting to see if there's a little bit of a breather in store for some of those companies. But today it was an underperformer, down almost 0.5% right there. For the most part, you look at these charts and we have bullish price action. The only exception to that is energy. And while energy was up a little bit today, I should have added that to my commentary about industrials and staples. Energy was also up just a hair today, 1 cent on XLE. Nonetheless, you can see from a posture perspective, intermediate perspective, the posture is still bearish here. Price is still below a moving average in this case. Whereas you look at the rest of the charts and the vast majority of the other sector charts on the board here, you do see price above its moving average. So energy is that one that just cannot seem to get out of its own way. In fact, that's a good reminder that I taught a dividend growth investing class here today, and energy was our focus sector. The way that I do that particular class is each week I will bring a couple of candidates that are worthy of a conversation for dividend growth investing purposes from a specific sector, and we kind of have a grudge match against those two, one after another, and kind of review that from not only a technical analysis perspective, but also a fundamental analysis perspective and a business model perspective. So if you're interested in whatever energy stocks I covered here today for my premium clients, feel free to check that out. It is posted to our calendar at this point. Let's go on over to the internet here briefly, since we're talking about the sectors, and also show you that I put together the sector selector here over the weekend to give you a sense of how some sector rotations are taking place right now. You can see down here at the bottom, energy was already in last place even before seeing what we've seen in the first couple of sessions this week. So it does make sense, given that I mentioned a moment ago that energy seems to be the only one that can't seem to get above its 30-day moving average. Up at the top, we do have technology that maintained its #1 position week over week, and then we had healthcare kind of go into the top 3. So remember, healthcare was the biggest performer today. On a week over week basis, as of Friday night, it went from 5th place up to 3rd place here. And then communications also advanced 1 place there on the backs of the likes of Alphabet and Facebook and some of those other big kind of internet-oriented names that are now part of that communications sector right there. Also, while we're over here on the internet, let's see how you guys did with your likes the last time around when I did the video on the 8th. And it looks like you guys did a great job for me. I really appreciate that. 114 of you guys clicked like. Remember, it only takes 5 seconds out of your day, but it goes a long way for both David and I to let us know that you want us to continue these videos each and every day. So thank you very much to those of you that did that. I hope you're able to do that yet again in tonight's video as well. I mentioned before I taught the dividend growth investing class today, but also be aware that David taught his directional options strategies trading room here today. So if you're interested in some of the bearish and bullish directional options trades that he was making for his premium students, you can find that listed in our trading rooms calendar up here if you are a premium member. And then tomorrow I've got my factor-based swing trading class, where we've been on quite the hot streak here recently. I think we've had either 6 or 7 wins in a row. And then David will be teaching his options inventory class. So lots of great stuff coming your way if you're a premium member of Market Scholars. All right, let's go ahead and get back on track with some of our charts over here. And let's do a few more of these 12 grids here. So let's come on over here and check out what's happening beyond our borders in the United States and head off globally to see if there's opportunities elsewhere. As you can see here, the answer could very well be yes. As I pull up this first set of 12 grids, which is chart 5E, for those of you that are premium members following along at home, you can see that there's only one pink chart on the board. That's the one in the lower left, and that's Brazil. And quite frankly, I don't even mind the look of that chart. We had a nice little pop higher here in Brazil today. It was up 0.32%, so it outperformed the United States. But, we had a bit of a pullback here recently, and let's call it the last 2 to 3 weeks, really since the beginning of the year. The first day of the year for Brazil was up nicely, but then we've really been pulling back every trading session since then. Well, that's up until the last couple of sessions. You can see yesterday we had a stabilization type of a candle, and then today we actually closed near the high of the session, and so we're kind of setting up for a nice little bounce around that rising 30-day moving average. So while the background color is that light pink color, suggesting that we have a weekly bearish posture because the intermediate line is at 73 and falling, we actually have an interesting setup from a bounce perspective right here. And all the other charts, as you can see, are green. In fact, all of them except for Japan are dark green. Japan is the only one that has that light green color where the intermediate line is at 44 and rising. Remember, the intermediate line would need to be above 50 and rising for it to have that darker shaded background there. But there's some nice looking charts on the board here. You can see down below here, South Korea has really become kind of a leadership group here in the last couple of weeks here. So keep your eye on maybe some of those exporters and technology companies from South Korea. The United Kingdom is somewhat similar to Brazil. However, the chart might even be slightly better. Here you got not only a dark green background color and a green moving average telling us that price is above a rising moving average, but yesterday, United Kingdom basically kissed that moving average and bounced up and away from it. So you have a nice hold pattern there, or close above the high of the low day. So keep your eye on EWU as well. You probably have more opportunities there from a ADR perspective. If you're trading stocks in the United States, there's probably a few more individual ADRs that you can access from the United Kingdom, like Diageo and Unilever and some of those, as opposed to those that are available from the South Korea market, because that market's a little bit more closed off. Even a big company like Samsung isn't overly easy for us to get into in the United States. So anyway, a couple of those nice bounce candidates setting up globally. Let's go ahead and take a look now at a secondary group of 4 and 12 grids. And these will be some of the smaller economies out there. So as you can see, for the most part, things are pretty strong here as well. The exceptions to that would be Spain on the top rung and then Argentina on the bottom rung. Now, Argentina has been just crazy. I mean, it's all over the place. If you've tracked Argentina in the last year or two, you'll know that this is kind of par for the course. Despite it looking like it's really rolling over here, it still is one of the best performing exchanges on the board. You can see right here, kind of where I'm circling my mouse, Argentina is up 15% in the last 3 months, which beats all the other 11 charts on the board. The only problem is it's rolling over at a lower high. So the technical analysis doesn't look great, even though there is still some decent price momentum behind there. But this was largely known as a dead cat bounce because of what had taken place in Argentina last year, where it was one of the worst performing markets out there. So we'll see where that takes us. Right now, the posture suggests caution there with that light pink background telling us that we have a weekly bearish posture. The Spain market is a little bit more dire because here you can see prices below the moving average and the background color is that darker shade of pink. So we have a strongly bearish posture on Spain. But otherwise, things look pretty decent out there from these secondary chart perspectives as well. I kind of like some of these setups here. Australia, I mentioned that the last time around. We're still thinking about you. I think the globe is aware that you're doing your best to put out those fires over there. But you know, the stock market's pretty hot over there as well. You can see that the Australian market, at least through the proxy of EWA, has just broken to a new multi-month high here in the last couple of sessions. So that's kind of an interesting breakout there, where you had a strong horizontal resistance area that was taken out at yesterday's close, and then we had a continuation move here today where it was up another 0.61%. You can see some of these other nice looking charts out here. Indonesia doesn't look half bad. The Netherlands had a nice little bounce here today and continues in that upward trajectory. Turkey has had a really strong bounce here in the last 5 sessions or so. I remember looking at this one where it didn't look so good, maybe on this candle over here, but boy oh boy has it snapped back strongly since then. So something's cooking there in Turkey, and I know there's got to be a bad joke in there, right? Cooking in Turkey. We'll leave it at that. Switzerland has been a nice strong bounce as well, but be aware Switzerland does have one of these overbought cluster signals today. However, you can see that the last couple of overbought cluster signals didn't really slow it down too much. So we'll have to see if this one is any different. But for the most part, that has been one of the stronger markets out there as well. And then also a decent bounce out of Sweden over here in the lower right-hand corner, where we're bouncing off of that moving average. So I think the key takeaway is it's not just the United States that's strong right now. This is a global rally. In fact, I think there was a unique ticker symbol that I just heard of the other day for the first time that maybe I could pull up here. Let's use chart 1A. And the ticker symbol, I believe, if I got this right, is Earth. Love that. URTH, and I imagine that this is kind of the global. This is like all stocks and all countries type of a mindset here. But you can see that if you're trading the earth or the world, that you are hitting new highs as of today. We actually touched 100 here for the very first time on Earth today. So it's not just a U.S. story like it had been in some of our previous years when it comes to strength in the stock market. We have a global story on our hands. This is a strong stock market across the board. All right, so with that out of the way, let's now get into our trade application example here. And I'm going to pull up chart 3A for this. And I wanted to pull up a stock that's already reported its earnings. Many of you are aware that we're in the earnings cycle right now. We had a lot of those big banks like JP Morgan and Citigroup and Wells Fargo already report here today. So in the coming weeks, we're going to have hundreds of companies that are reporting earnings, and it can be a little bit more difficult if you're trying to trade around those earnings reports. So I did find one company that's already reported their earnings because they're a little bit off cycle, and this is a company that we've actually been dabbling in a little bit in my long-term options class that I teach on Monday afternoons. This is Carnival Corp. Ticker symbol is CCL. This is a company that's kind of been all over the place in recent years. It's actually struggled in the last, I want to say, 3 years. Yeah, this is a pretty ugly looking 3-year chart here. From a 10-year perspective, you can kind of see where it's at as well. It hasn't made up much traction here. So for those of you that are thinking to yourself, well, geez, the earth is at all-time highs. I've missed the boat on so many stocks. What am I to do? Well, there are going to be some stocks that are just simply left behind, and perhaps Carnival Corp is one of them. It is a stock that has a pretty high dividend yield as well. I think it's like a 4% yielder. It is. It's a 4% yielder at this point. They have halted their dividend, so be aware of that. Their dividend has been at 50 cents for the last 5 or 6 quarters, whereas typically companies that have a long history of raising dividends do it every 4 quarters. So be aware of that as well. This is by no means a perfect trade setup or anything along those lines. But as I was looking at it here, you can see that it did report its earnings back here in late December, and the stock gapped up nicely after learning about that earnings announcement. The stock had then kind of gone up for a few more days and then pulled back, and it almost looked like it was going to fill that gap. Some of you have heard that term before. There was a gap between here, and the theory is once that gap kind of air pocket is breached, like it was on this candle, which was a little bit lower than this candle, then the thought would be that this gap would get filled. Well, that didn't happen, so it was a little bit of a trickier one to kind of trade effectively. Well, you can see today was a really impressive candle for Carnival Corp. It was up 1.7% today on a day when the S&P 500 was actually down a little bit. And so this one, as you can see, not only has a strong bounce underway here, but it has a green moving average, which is telling us that price is above that rising moving average. You can see that for once, it's actually outperforming the S&P 500, right? You can't say that a lot about this company in the last 3 years, but this is one of these 3-month periods where it actually is beating the S&P 500. And you can see that the background color of the chart turned blue today with the big bounce that we had, and that was as a result of that near-term line on the market forecast going higher there as well. So one of the ways to play it would be to simply buy the stock and kind of shoot for some of these highs that it achieved when it was kind of topping out up here around 51.5 bucks. But another way to play it would be through the use of a sold put. Now, I typically only apply a sold put mentality on stocks that I would be comfortable owning for the long term. So each one of you has to kind of make that decision for yourself if Carnival Corp is the type of company that you would want to own for the long term. Obviously, the cruise ship business is a successful one when the economy is strong, but may not be quite as successful when people have less discretionary money to spend when the economy sours. So I'll let you decide on that. But one available choice for us is if we come over here on the Paper Money platform and take a peek at the February monthly contracts with 38 days left until expiration, you can see that we have a pretty decent candidate here in terms of a strike price. The 47.50 strike price right now is going for a 50-cent credit. So I'm talking about the put side of the ledger here. So by selling the 47.50 for 50 cents, it lowers our potential cost basis to $47, right? We just take the 50 cents away from the $47.50. So if we were eventually put 100 shares of Carnival Corp, our cost basis would effectively be $47 per share. Now, if we come back on over here to the chart, I'll show you where $47 is. It's basically right here where I'm circling with my mouse. Now, notice if you kind of track that crosshairs to the left, you'll notice exactly where that puts us from a technical analysis perspective. That is the gap fill. So If there is somebody that's waiting for that gap to fill before they start taking their own bullish positions, they might start establishing their bullish positions around $47, and that might ultimately become a future level of support. So maybe another reason to get a little bit more excited about this particular trade. So let's go ahead and put that one on. I'm going to come back on over to the trade tab. I'm going to simply click on the bid price here, and I'm going to change this to 50 cents, which is the mid between the bid and the ask, and we'll see if we can get filled on that first thing in the morning. Confirm and send, and there it goes. All right, well, thank you for joining me here yet again. It was a little bit of a pullback day for the S&P 500, but the trends remain in shape. We have bullish postures across the board. We're looking for opportunities where we can find them. Perhaps we found one tonight with the Carnival Corp. So with that, I want to wish you all the best of success with your trades and your investments, and be sure to click like on Twitter if you appreciate these videos. Take care, everybody. Bye-bye.